Hello, my name is Russell Myers, independent for U.S. President for 2024. On Thursdays, the U.S. Treasury holds an auction for U.S. Treasury bonds. So this past Thursday, the long-term treasuries, the 30-year treasuries, did not go quite as planned. The yield, the amount that this returns, had to go much higher than was expected and settled at about 4.8% yield. Why is this an important thing? Well, first of all, that means this is because nobody was buying them. If nobody is buying, then then at this auction they have to keep on going up on the yield. If you go to buy a U.S. Treasury bond, which you can do through Treasury Direct, then if you look to see how much of a return you're going to get, you're not going to find out how much of a return you're going to get at this auction. If you put money in there to buy U.S. Treasuries for this coming Thursday, you're not going to get a quote on how much of a return you're going to get on this coming Thursday. The only information you can get is what the returns have been on previous auctions. So to give you an idea, hopefully, of what that return is going to be. So this indicates a few very large issues. Number one is if nobody wants to buy these, then that means that people are not trusting to loan their money to the U.S. government for 30 years because they just don't trust that the government is going to be able to pay it back. There's no real reason to believe that. Would you put your money, loan your government money to the government for 30 years for a less than 5% return and even believe that you're going to get your money back? Well, even if you get that money back, if inflation is exceeding what the return is, then you're losing money for that entire period of time. Now, this is an annual return. Now, on the long-term bonds, the treasuries pay out dividends on a quarterly basis, I believe, as opposed to shorter-term bonds up to 1 year, which pay out an entire amount at the end. From a 4-week to a 2-year bond, they pay out all at once. So the big problem here is that if you buy one of these long-term treasury bonds, your money is tied up. You're not going to be able to sell it back to the government and get your money back, even prorated. You can use it as collateral to take out a loan, but you're going to wind up paying more interest on the loan than you're getting as a return on the bond. Okay? So what happened was that they kept on having to increase this, and still 1/4 of these bonds were sold to primary dealers, meaning large American banks that invest in, are required to invest in US Treasuries because they are part of the Federal Reserve System. This is a requirement that they buy a certain amount of bonds. Normally, this is about 10%, but this time it went up to close to 25% of these bonds. Other countries, there was a large sell-off of U.S. Treasuries earlier this year, and other countries are selling off U.S. Treasuries. Russia has completely divested from U.S. Treasuries. China is selling off more and more, and you can find this in the news. The largest holder of U.S. Treasuries at this time is Japan, but they are selling off U.S. Treasuries as well, as is Saudi Arabia. So all of our largest holders are divesting from rather than and not buying into new U.S. Treasuries. Now, in most cases, I suspect that what they are doing is just letting previously purchased bonds to mature, and rather than reinvest it, they are just taking the money out and putting it elsewhere. Now, since June, when the deal was made between the administration and the Republicans to suspend the debt ceiling until 2025 again, the government has been spending like drunken sailors at this point. And the problem that people see with government spending is what the government is spending money on. Warfare, sanctions on other countries, etc. Corporate subsidies, corporate welfare, tax breaks for the wealthy. These are the things that your tax dollars are covering. And there are people that say, oh, well, taxation is theft. No, taxation is not theft unless it's not being used to support your own population. So since June, the government has issued $1.5 trillion worth of debt. And it's expected to reach another $1.5 trillion by the middle of next year. So $3 trillion in 1 year added to the debt, and we're already at over $33 trillion in debt. And this is as social support spending has declined. And as far as infrastructure, there's nothing realistic that's being spent on infrastructure. They're counting things toward infrastructure such as building a microchip plant in Arizona, which is one of probably the worst place that you could build. Aside from being on a fault line, Arizona is one of the worst places that you could build a microchip plant because it takes a tremendous amount of water. And, Arizona has already canceled plans for housing developments because there wasn't enough water to provide for the expanded population. So why are you going to build a microchip plant that needs as much water in a year as a small city to function? But that's being counted as infrastructure. Our roads are collapsing, and but we're gonna give tax breaks again to wealthy people to install solar panels. We're going to consider that infrastructure. I mean, if you were wealthy enough, wouldn't you just go ahead and install solar panels or wind power anyway, just to reduce your cost on energy over the long term? Why do you need a tax break to do this? And of course, spending money on warfare. I, for one, do not believe that any defense spending should be, should count toward the GDP. Depending on your calculations, on who you listen to and how it's calculated, government spending is responsible for anywhere from 25 to 33% of U.S. GDP. So if you stopped that, what would happen to the GDP? I actually think it's higher than that when you consider the millions of government jobs, teachers, janitors, road workers, the military, health departments, etc., etc. But as it is, toward the GDP, it definitely counts when you consider social support spending, Medicare, Medicaid, Social Security, food stamps, Section 8 housing. These things do count toward GDP, and as well they should. But military spending, no, that should not count toward the GDP. This is a loss. This is an expense. It is not a profit. Except for a very few people. So if you took that out, then who knows what it would look like. And how does that actually benefit you? Are we at threat of invasion from another country or attack from another country? Not at this time, no. You can say our troops in other countries are under threat. Well, if they were not over there, they would not be under threat, would they? And U.S. interests, what? What interests? Do you have interests in other countries? Not unless you are an oil company, a drug company, etc. No. What this is doing is propping up, again, corporate profits. You are spending money on the military to protect corporate profits. This is a bad sign. The fact that this auction went so poorly and that the returns on US Treasury bonds, anywhere from the 4-week on up to the 30-year, the yield keeps on rising. That means that as the government keeps on issuing debt, that it costs more money for that to pay that debt. Now, other countries are having their own financial issues, their own economic issues. All of Europe is in recession. We've got conflicts, trade conflicts going on with China, which could turn into a military conflict. Even domestic lenders, investors, are not seeing very much hope of getting a decent return or even trusting to loan their money to the government at this time. Again, would you loan your money to the government at less than 5% annual interest right now? Let them hold on to your money for 30 years. Would you do it? Most Americans are going to say no. And the fact that even the large lenders are saying no at this point. This is a very bad sign for the U.S. economy. At this point, Deutsche Bank has earlier this year stated that the odds of the U.S. entering a recession in the next 0 to 12 months stands at 90%. You can listen to the Wall Street economists all you want, but the only thing the Wall Street economists care about is Wall Street. They don't care about the actual economy. Wages are stagnant or declining. Layoffs keep on increasing, and they are going to get worse. If people don't have money to spend, then layoffs follow. So other countries are not trusting with all of our spending on warfare and sanctions and the expenses related to sanctions. Other countries are not going to buy U.S. Treasuries, especially like China. They're not going to invest in U.S. Treasuries when that money is being used to increase the military presence surrounding China. That makes no sense at all. So this is just going to continue getting worse. If we were investing this money in our own people to improve our own domestic trade, then yeah, people would probably be happy to invest. That's what most of us think of. When we think of government spending, we want that money spent to benefit us, not to benefit the weapons makers and the oil companies and so forth and so on. Have I mentioned that the microchip plant in Arizona is being built by TSMC, Taiwan Semiconductor Manufacturing Corporation? So we're literally paying a foreign entity to build and operate this plant. So the profits from that plant are mostly going to go to Taiwan, which is part of China, by the way. I expect future Treasury auctions to go even worse than the one today. This was only a sign of what is to come. Until we change our tactics, until we change our methodology, until we change our ethics, then this is just going to continue. This is just a sign of things to come. We keep on racking up debt that we can't pay off. Our debt has been building ever since 2001. So 22 years now, our debt has been rising and rising, and there's no reason to believe that it will do anything else. We've got to make a change. We need to invest in our own people. Share this video. Talk about these subjects. If you can afford it, please donate whatever you can to help expand this campaign, and I will catch you in the next one. Thank you for watching. Hope you have a good day.